Today I'm joined by Chief Economist Edgar Walk from Metzler's headquarters in Frankfurt. Hi Edgar, Germany received some good news recently with the release of a better than expected German IFO survey and GDP figures as expected. The German economy is still performing relatively well despite the international turmoil, but at the same time some economists say that the crisis is now heading for Germany. Do you think the markets are paying too much attention to every piece of data coming out of some of the Eurozone economies and over-analysing it or not?
No, I think the worries are justified, as we have seen now that the banking system in Europe is under considerable stress, and European banks are the main financer of global trade. And if they are deleveraging now too much, too sharply, then we will see a negative impact on German exports and on German GDP. So the good numbers, a very healthy GDP growth data from the third quarter, reflect the past. The future looks much more worrying for the German economy.
Earlier this week, Bundesbank revised down its growth forecast for the German economy in 2012 amid risks of a pronounced weak patch. It's worth remembering that Germany does have its own heavy debt burden, but what kind of weak patch are we talking about here and how long is it likely to last?
I think the German economy is in Europe one of the most healthy economies. So soft patch for us means that the German economy still can grow next year by between 0.5% and 1%. So to some extent we agree with the current forecast of the Bundesbank. We think that consumer spending will remain relatively healthy next year. We still are relatively optimistic for German exports into emerging economies. But clearly exports to other European countries will suffer next year, and maybe we will get also some support from government spendings, because Germany doesn't need to save or doesn't need any fiscal tightening at the moment. So I think that the environment is relatively still okay for Germany.
This week was also disappointing for Germany as they sold a lot less in government bonds than they had hoped for. The question is, if Germany are having problems selling their bonds right now and investors are shunning even the safest Eurozone assets, what hope is there for the rest of Europe at the moment?
At the moment, I think it's too early to say that now the crisis has spilled over to Germany because of one failed auction. Maybe the next one will be very healthy again. So I think we should become worried if we see 2 or 3 failed auctions. Then I would also be worried, but not with one.
Well, Germany and France are divided about the decision to issue joint bonds and the greater involvement of the ECB to bail out troubled economies. The German government is concerned that joint bonds would reduce pressure on member states to reduce their debt burden. What's your opinion on the matter?
Yeah, I think Germany is at the moment opposed to euro bonds, but I think over time they will change to and also support the emission of Eurobonds, because it's, I think, the only option out of the crisis. I think what Germany wants is a change of the treaty, so that Germany can be certain that no country lives beyond its means. That we have clear rules in the euro area, that every country has to keep its fiscal policy in line with overall euro area policy or EU policy. And if this has changed, if the treaty has changed, then I think Germany will agree to euro bonds. I think it's only temporary opposition. But at the end of the day, at the end of the process, we will see a fiscal union and we will see euro bonds. I think that's the direction we are moving.
Is there a possibility then that Germany is beginning to lose its status as a safe haven within the European debt crisis now, or not?
I think it's a very good question, because in a previous financial market crisis, Germany could be a safe haven because there were not so many credit relations between the German Bundesbank or German financial system and the country in crisis. So the losses were always relatively small. But this has changed. Germany, with targets 2, with the ECB, Germany is strongly involved in Europe, and also through the financial system. So banking and insurance companies, they hold a lot of assets from other euro area countries. So a worsening of the crisis will also mean that there will be huge losses for Germany, either through the central bank or through the financial system, which would need to be recapitalized by the German government to some extent. So I think this is a very, very different situation we are seeing now compared to the crisis in the early 90s, the exchange rate crisis. There were hardly any losses for German banks or insurance companies or the German government. So to some extent, our feeling is when the crisis worsens, that Germany could very easily lose its safe haven status. Not at the moment, but a further worsening of the crisis and maybe also breakup of the Eurozone would mean that the German government would need to cover losses of several hundred billion euro.
I'm afraid that's all we have time for today, Edgar, but thank you very much for your interesting views on the current and future outlook of the German economy. Now viewers, stay tuned to Dukascopy TV for more exclusive TV and phone interviews. Goodbye for now.